You can be the best salesperson in the world, but if you aren't confident that you have the product to meet the promises that you're putting out there, you're screwed. If you're not writing with some of those markets, I think you're doing yourself and your agency a disservice.
People, if you were doing premium versus loss summaries, they'd have the target premiums anyhow. Like, they would know what they are. They're not asking you that to beat the quote. They're asking it to see if they can even be competitive.
It's remarkable. I go into these agencies that are $500,000, 750,000 in revenue, and they've got 3 direct appointments that they run all their business through, and they have 7 wholesalers that they place with. And you're like, wait a second, that doesn't make any sense at all. Some agents were a little overexposed in 1 or 2 markets that made dramatic changes and left them in a really tough spot when it came to renewal time for large book.
That's a better business decision for me, because I may be giving up $5,000 in commission, but preserving $50,000 or $100,000 in contingency commissions. And producers don't think that way.
By and large, the fact that our brokers tend to spend the vast majority of their day with agency principals and producers from, sub $5 million, sub $3 million revenue agencies who are not savvy in interacting with wholesalers, that don't have large wholesale books. The market needs someone who candidly gives a shit about local agents, that is going to step up and be the ideally one-stop shop for anything that let's say sub $5 million revenue agency would need.
What's up, everybody? Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. And I know a lot of y'all out there are struggling right now in the hard market. Some of you coming over from the captive side, having a hard time getting carrier appointments. Some of you have never really dipped your toe into the commercial space and you're ready to. I've got good news for you. We got a guest today that can help you with that. Mr. Ted Stuckey, who is the president of Local Edge. You probably have heard his name before or remember him from Nationwide Brokerage Services. Is that correct?
Yep, Nationwide Brokerage Solutions.
There we go. I knew it was NBS. I was trying to guess, but we're going to talk a little bit today about what has happened since they were acquired by Bridge Specialty and what that means for you and how you might be able to expand your book of business and subsequently your bottom line by using their offerings. So Ted, welcome, man. First time on the show. Glad to have you, brother.
Yeah, I appreciate it. It's that proverbial long-time listener, first-time caller. So happy to be here.
And you've also been very kind over the years to send me things in the mail randomly, like little notebooks and planners from your NBS days. And I never took the time to sit down and thank you. So I'm going to apologize and thank you at the same time. But those things didn't fall on deaf ears. My issue is I just get spread way too thin and sometimes use that as an excuse when I shouldn't. So before we get too far cranked up into what's going on in Local Edge, why don't you give everybody a little bit about your background and kind of talk through what led to the deal with taking NBS and moving it over and being acquired by Bridge. And then ultimately, how did that strengthen you? I mean, we just summarized the entire podcast, but we'll talk about how that strengthened you and specifically what you're excited about as the leader of the organization moving forward.
Yeah, so I've been lucky to lead Local Edge now for almost 4 years, and it came over to run it at a really interesting time in its history. So I had known of Nationwide Brokerage Solutions prior to joining. My career mostly was spent on the carrier side with carriers like QBE, Travelers, Markel. And what really struck me about Nationwide Brokerage Solutions at the time that I went over to it was the value of the role it played in the market. So just a little bit of history for those that may not know anything about Nationwide Brokerage Solutions. It's an operation that was started in the mid-'70s. And over time, one of the main roles that it played was giving nationwide captive agents access to third-party markets and solutions. And as Nationwide's distribution strategy evolved, NBS also had to evolve. And so why that history is important is everything about what we do is rooted in that goal of serving those local agents, at the time, those nationwide captive agents. And when Nationwide went independent, we had an incredible opportunity to sort of reimagine our business and look at the market and say, what does the market need right now? What are we uniquely suited to solve for? And how do we take full advantage of that? And then, as is now, the market needs someone who candidly gives a shit about local agents, that is going to step up and be the ideally one-stop shop for anything that let's say sub $5 million revenue agency would need. For some of those agencies, that's I need market access for non-standard auto risks, or I need access to a couple national homeowners carriers or some national small commercial carriers. I'm not big enough to get that access, so I'll subdirect through us. Great, we can do that all day. For others, it may be I'm a big personal line shop, and I've got a couple new producers that are really interested in getting into small commercial, but they've never really done it before. Well, in that case, subdirect really isn't the right approach. We have a brokerage operation that will broker a monoline minimum premium comp policy for you if you've never done it before. They will hold your hand through that process, help you fill out the forms, understand appetite, understand carriers. We'll do that all day long. Do other shops do that? Absolutely not, because it's a horrible way to make money. But it's essential for those local agents who are making that transition from, let's say, personal lines into more of a blended personal small commercial shop. And once you become a little bit more sophisticated on the commercial line side, the whole world opens up. You talk about it all the time, whether you're selecting your niche or trying to further go up market, getting access to admitted or non-admitted middle market solutions is exceptionally hard when you don't already have an appointment. Getting into the E&S space, dabbling a bit, whether it's just a one-off risk or an account that's really important to you, and having the confidence to go to a large global wholesaler and say, I have this risk, what can you do with it? That's terrifying. And so for us, it's really been this journey of moving away from the days of just supporting sort of nationwide captive agents on a market access basis into saying, well, what do local agents need in the marketplace today? And how can we take advantage of that and really provide a service that's critical? And I guess we did it well enough that we got the attention of some pretty big players, and now a couple months ago announced being acquired by Bridge Specialty Group. So leaving Nationwide, going into a large global wholesaler where we're surrounded by peers who are world-class at what they do, but importantly, they allow us to do what we do exceptionally well, now just with a bigger platform.
That's awesome. I mean, I think that, at its core, most agents are really looking for a few things. Number one, variety of markets, right? I have always been of the mindset that I don't want too many mouths to feed. So I've been pretty conservative, both with the direct appointments that we have at my agency, as well as the wholesale relationships that we have at the agency, because I don't like people coming by saying, give me more, give me more. I'd rather them say, thank you for giving me more than what we expected of you. And as long as I can do that, then I'll sleep well at night. So I think a lot of people out there are kind of in a similar boat, some of them by choice, some of them because they don't have a choice. I mean, I've got friends that are, down in the southern part of the state here in Florida that really can't get any kind of appointments because carriers just don't want to appoint people there. And so I think that as they're moving into the journey of working on things that maybe are new to them, the last thing they need is not feeling comfortable that they have a market for something that they're going to prospect. Talk a little bit about the diversity that you have. Let's just pause the E&S stuff for the time being, because I do feel like that that's probably an area where more people have some experience, as opposed to understanding that there really are ways that you can access the carriers you want to have an appointment with and can't get without having to sell your soul to do it. So I'd like to talk about that for a little bit, and the variety of the carriers you offer in that regard.
Yeah, it's really interesting. I think your points well said on sort of that desire to limit the number of mouths to feed and have sort of a select grouping of markets that as an agency, you write on a day-to-day basis. And one of the things we found in the last couple of years was um, some agents were a little overexposed in one or two markets that made dramatic changes and left them in a really tough spot when it came to renewal time for large books. I mean, we're talking 2, 3, 4 million in premium,
Mm.
getting non-renewed at sort of at a moment's notice, and them saying, "Well, what do I do now?" Because, as you know, getting an appointment with one of these mainstay national admitted markets anymore is anything but guaranteed. 10 years ago, that wasn't the case, but there are, I guess, any market that you could think of today. I can give you plenty of examples of where they've made very dramatic decisions to say, absolutely not, we're not doing any more appointments here, or we're not expanding appointments there. And so in our world, whether it's personal lines or small commercial, it runs the gamut from the large national markets. No sub-direct appointment is ever guaranteed, no matter where you are, whether you're with an aggregator or going through a market access provider or a wholesaler. But the large national markets that we all know and love, we have massive books of sub-direct appointments in that space, all the way into some of the more regional and super regional carriers that fill a very important role in a 3, 4, 5, 6 state sort of footprint. And then down in some of the niche specialty players, as well as there's a whole slew of markets out there that have aligned themselves exclusively on a wholesale distribution model, a subdirect wholesale distribution model. Now, exclusively is sort of in air quotes because, as you know, in this industry, nothing is black and white. But you think about carriers like a USLI or an American Modern, or even a Jewelers or an RLI, that for your average agency really should be critical distribution channels, critical carrier partners. By and large, getting access to them requires going through a wholesaler or someone similar. And so when you look at what we're placing on a given month, you're looking at over 400 carriers that are processing commissions through us in a given month. So it's a massive breadth of markets that for your average agency is absolutely filling a critical need for them. Then you take it up a step to the mid-market space, where I know you and your agency spend a lot of time in. Getting a Travelers or Hartford or CNA mid-market appointment is exceptionally difficult, as it should be, right? We don't want a bunch of agencies out there trying to write that business without a certain level of sophistication. And so we're finding a lot of success in those agencies that just want to become more sophisticated in their commercial offerings. It's not about excess and surplus lines. It's about getting into more of that lower mid-market space where they're maybe writing some larger contractors, some larger HAB risks, some larger manufacturing, product recall. Commercial ag's a great example. Boy, if you want to get into commercial ag today as your niche, the odds of you getting a direct appointment with any of the major commercial ag writers are not in your favor. And it's even exceptionally hard for us to get that capacity and get that access. But having a partner like us who can give you that not only differentiates you in the marketplace against your peers, where we can literally give you access to products that no one else in your community has, but importantly, it gives you that confidence that you talked about. And that's all that matters at the end of the day, right? You can be the best salesperson in the world, but if you aren't confident that you have the product to meet the promises that you're putting out there, you're screwed. And the way we try to transact business, the way we try to go to market, is entirely based in a desire and a passion to give that local agent the confidence they need to do what they want to do in their agency. Because it's not always grow. It could be, I want to consolidate markets. I want to have less of a footprint and I want to work with someone to do that. Or it could be, I want to get into this niche and it's a chicken and egg situation. I have a really good idea of how I'm going to attack it, but I have no product to back it up. How do I confidently go into it? That's where we live and love.
Yeah, I think another thing too that a lot of people are facing right now is carriers decide that they're going to pull back a little bit and people are losing appointments. I'll give you a great example, man. We lost our contract with Liberty Mutual here in the agency because we just couldn't write enough builder's risk and monoline motor truck cargo to keep them happy. Like literally that's all they were writing in Florida. And so we had a couple 100,000, not a ton of business with them because they weren't really doing anything in the middle market. And I'm not going to disparage them in any way. That's the only reason I use the carrier's name. Just making sure you.
Yeah.
By the way, everybody, let me throw the disclaimer: my opinions are mine and not Ted's, so I'll leave it at that too. But, um, you know, we found ourselves with this other business that we had with Liberty, which just happened to be mobile pet groomers that we needed a home for. Now we found a home in another bridge specialty counterpart of yours,
Mhm.
Bracefield, where
Yep. Great job.
we just simply did a book roll of our Liberty stuff over there. That honestly was so much easier than me trying to figure out how to remarket and replace all this stuff, because the reason it was with Liberty is because they had the best program for the best price for that client to begin with. And I didn't want to have to try and go back to a Guard or an Auto Owners or a Hartford, who we also placed that class of business with, and then explain to my client why it's going to be $2,000, $3,000 more a year, because they're not huge accounts to begin with, but we write enough volume of them that it's a nice chunk of business. So, if you're an agency out there and you're getting sort of those threatening letters or the calls about, hey, we need production or we're going to pull your contract, I wouldn't. Yes, you need to produce, if you can, but at the end of the day, reaching out to somebody like Ted to be able to go in and roll that book is always an option for you to be able to preserve the carrier relationship with the clients that are already with that carrier without you having to lose a bunch of time in the process and operate at a more inefficient level in your agency. And I think that you probably, I don't know, man, we've never talked about this. So I would just suspect you've probably seen a decent amount of that, or at least an uptick of that over the course of the last couple of years as the market has continued to harden, because contracts are harder to get, but they're also harder to keep, man.
Oh yeah. No, it's so many different angles of that same example. One that immediately comes to mind: an amazing agent who went out on their own, and had the greatest agreement with their prior agency ever, and they were able to take their entire book on day one, and they were all excited because they're hanging up a shingle, they're out on their own, and only to find out that their biggest carrier, who they had about $7 million of premium with, their biggest carrier would not give them an appointment because they weren't giving out new appointments in the state. And so what do? You've got the book, you don't have the appointment. And so gave us a quick call. We could quickly run it under our master code. And our promise to them, as we do with any agent, is if there ever comes a time where the carrier says, hey, I want to take this guy direct, it's your book. Go. I didn't do anything to build a book. So the minute that carrier starts opening up contracts in this state, which by the way, we're calling that carrier every month to see when they are, because I want him to get the money he's owed. It's his. Go take it, because we know that that's the right thing for those local agents. So as long as you aren't doing anything ethically dubious, if you fear that you're about to lose a contract that means something to you, it's worth giving a shop like ours a call to say, is there any way I can roll this under yours? Because not only do you get to keep it, but we have a massive agency who has a multi-million-dollar book with a large national carrier, should absolutely be direct. And they want to keep it with us because they aren't held to the same growth requirements that they are on a direct basis. They don't have salespeople knocking on their door every month. They get a single commission check from us and a single statement every month. They love it. And different strokes for different folks, but it's absolutely a model that is unfortunately necessary in the market today. And the question is, how do you do it in a way that doesn't just completely screw over the local agent, which is how we're, steadfastly focused, because there are a lot of ways to take advantage of that very situation. But for us, it's more of a, we have this, come join the party. And when the time's right, if you want to go direct, have at it. If you want to stay with us forever, that's great. If you want to use this for other things, by all means.
Yeah, and I think, that's probably a secret, to be honest with you, among agents out there. I don't think very many agents really understand that there is a way for you to get market access without having to join an aggregator to do it. And I mean, not that the aggregator model in and of itself is completely broken, but there are just some agencies out there, and I see this probably more with people who are leaving the captive world and coming over to the independent side, where they don't want to go from being captive to being captive. You know what I mean? And
Yeah,
not even that you feel captive in an aggregator, but it's just the perception that they have that they're not in complete control of everything that's going on in their agency. And so I think that a lot of agents are probably just cobbling together what they can through E&S and other stuff because it's just, no offense to you, it's just not well publicized, man. I
no,
don't think that
no.
agencies understand that, oh, you need CNA? Yeah, you can come over here. They've got CNA at Local Edge, and you can quote with them all day long, no problem. I don't know why. So that's one of the reasons why I was happy to have you come on the podcast, because a lot of people will benefit from knowing that you probably, I mean, I don't know who else you would even compete against. It feels like pretty much the people that I know that have the ability to go to standard carriers have all been acquired by Bridge Specialty Group in some way, shape, or form. So it's interesting to see, but I do think that agents aren't aware that they don't have to go and join an aggregator to be able to write admitted business. The other thing I don't think they necessarily think through, and again, this is my opinion, I could be way off base here, but they don't look at it as building for the future. Like I don't feel like they realize, hey, you know what? Rather than me go to Travelers and ask for an appointment when I've not proven anything, why don't I just go write a few $100,000 in premium with them or $1 million in premium with them using somebody like Local Edge, and then I can go to them with my business plan and have very specific results of what I've placed with them through Local Edge, and then make that their case to try and go get their own direct appointment. You get the benefit of the growth for 3 to 5, 6 years at Local Edge. They get the benefit of having the market access, but ultimately at some point it's going to make sense for them to have a direct appointment with that carrier if they're writing that much business. And I don't think agencies think through it that way. The third area that I think agencies fall short is, even if they have a direct contract with somebody. I'm going to give you an example. Guard. Okay. I'm not, and again, this is not anything disparaging. I've just picked them because they were the first carrier that came to my name. But let's say that I have a direct appointment with Guard, and do you have an appointment with Guard at
Yeah,
Local Edge? Okay. So
yeah.
Local Edge has an appointment with Guard. And I have an account, and Guard's probably the absolute worst example right now because they've gotten very tight and conservative on their auto, but we're playing in make believe land right
Yeah.
now. Let's assume that I have a risk come to me that's got 25 vehicles in the fleet and the loss ratio's been okay, but I'm not 100% sure of where it's going to land. Okay. And let's say that now we're definitely in fictitious land for Florida. Let's say that premium's $100,000 a year. Okay. Now, I don't know what your compensation model is. I know, what the standards are. So again, I'm going to put a disclaimer on this. I'm using numbers that are basic generalizations, not necessarily specific to what Local Edge does. But let's just say that Local Edge pays out 10 points to go to Guard, and if I go to Guard directly, I get 15 points. So I would get $15,000 in commissions to my agency if I place that $100,000 account. Or I could go to Local Edge and I would only get 10. This is also equally as important when you're thinking, and probably maybe even more, about carriers you're going to use to place cyber coverage with and everything else. And here's why. If I don't know that account's going to perform right, but I have a history of performing very well with Guard, I want to protect my profit sharing with Guard. I'm willing to lose 5,000 in year number 1 if I need to place it somewhere to make sure that we get our programs put in place to where we can run things, run the fleet safety and the driver selection and the MVR monitoring and all the things we need to do, and show that it's going to be a profitable account and that they're actually adopting what we are advising them to do. That's a better business decision for me because I may be giving up 5,000 in commission, but preserving 50 or 100,000 in contingency commissions. And producers don't think that way. unfortunately, many producers become agency principals. But when you're an agency principal, those are the kinds of things you need to be thinking about. And it's not that you want to just adversely select and give all your crappy business to a third party. That's not what I'm saying. That account may perform very, very well, but if you're not 100% sure, I'm willing to take a $5,000 bet to preserve what I have on the other side, knowing how clean my book is with them. When we've had a single digit loss ratio with them since I've had them as a carrier. So great relationship, very profitable relationship. I don't want to put that at risk. The reason I mentioned cyber specifically is, you ever know of any small cyber claim? I mean, literally every cyber
No.
claim is a shock loss relative to the size of that business, and it's low dollars in premium, right? So
Yeah.
if I could go to Chubb and write the cyber policy and it's $5,000, or I could go and write it with Local Edge for 5,000, I'm literally only missing a very small amount. I'm missing $250 in commission, but they have a multi-million dollar cyber claim. I just blew all my contingency out of the water across the board. It's one of the reasons why I don't write cyber direct with any of our admitted markets. I would rather make less money running it through a wholesaler who has a specialty in that or has the contract, so that I can make sure that we're giving them the most profitable business we possibly can at the agency level. And, again, I want to be clear. I'm not saying that every piece of garbage that you get in is what you should send over. I'm just saying make educated decisions, because sometimes you can strategically use market access to help you become even more profitable than you already are, but you have to be willing to look at it through that lens. And too many people are like, "Oh, I'm going to put everything I can with my direct markets." Well, that's great, but I'd put my profit sharing checks up against anybody any day of the week, because it's been intentionally managed.
I think that idea of strategically managing your carrier partners, it hasn't gotten deep enough into the independent agent distribution channels as it should. You obviously see the very sophisticated, top performing agencies doing doing a lot of that. Obviously, the large global brokers do that all day long. They have very specific panels where they can place. But you're talking earlier about number of mouths to feed, and really being intentional about n number of direct appointments that you want to make sure that you're driving business to. I don't know. Let's say that maybe the top 10% of agents in the country do, maybe the top 5% of agents in the country actually do that and act on it. Not just say they do it, but act on it. 5 may be generous. How many of those have the same conversation about the wholesalers they work with? It's remarkable. I go into these agencies that are $500,000, 750,000 in revenue, and they've got 3 direct appointments that they run all their business through, and they have 7 wholesalers that they place with. And you're like, wait a second, that doesn't make any sense at all, because you're losing any economies of scale there. A lot of wholesalers, us included, we also pay contingents. We have an agency incentive bonus where you can actually end up making more placing some of this pseudo subdirect business with us than you could on the street direct. And some people know that secret, and some really act on it and make a lot off of it, which is fantastic. But the number of local sized independent agencies out there that are being really disciplined and saying, these are the n number of direct appointments that I'm going to lean into, and then this is the 1 or 2 wholesaler that we work with, because they have a full suite of capabilities, and because we trust that they're going to be able to take advantage of getting this business placed, is exceptionally low. And my example of maybe having 5 or 6, I don't think that's an outlier. I think there's a way too many agencies out there that are working with way too many wholesalers, and it's all onesie twosie policies that they think, oh, I'm just going to set it and forget it. Don't worry about it. Like, it's not worth moving. It is worth moving, because if you can find that partner that you can work strategically on, I love that idea of, I've got a big direct book, and this is an account that I really want to write, but I'm not sure I want to put it direct. Like, let's route it through a wholesaler and see, incubate it for a year or 2 and see how it performs. All day long, we're built for that. But if you have 7 wholesalers that you're working with, or even 4 or 5 that you're working with, and you're $1 million revenue shop, that's 3 more than you should be working with, or 5 more than you should be working with, because you don't have the depth of that relationship where you can call the broker and be like, listen, I have a direct with Guard, but I'm going to strategically move this business through you. and that's how this is going to work. And we work hand in hand to make it successful, because you can execute that strategy really successfully. You just have to be intentional, and not near enough or intentional enough on the direct appointments, let alone on the wholesale side.
Yeah. So the other thing too is I feel like I just want to make sure I'm very clear. I don't want people sending garbage to Ted, right? But
Please don't.
the ability of somebody who has the size of book to absorb the things that we're not able to absorb is also a little bit comforting, because if I've got a claim that's $50,000, that may be a big deal to my loss ratio with one of my carriers, depending on who it is and what other claims I've had. Dude, you could have a $50,000 claim with Travelers and it wouldn't even register on the radar, probably based on the size of premium I suspect that you would have with them, or insert carrier name here. The other thing is, I've said this plenty of times on the podcast. I think all wholesalers are the same for the most part. Okay. And I'll clarify that. But specifically with the excess and surplus lines people, unless you need AmRisk, who doesn't go into every wholesaler, they pretty much have all the same relationships. Or carrier contracts rather. They pretty much, unless they have a specialty program for something, you're going to be able to place the same type of insurance, get the same quotes from the same carriers, from pretty much all of them. It is, to me, in our industry, which is very much relationship based, the most relationship based relationship that there is, right? Like, you better, as a wholesaler, you got to turn submissions, you got to give good results. There's got to be communication. That's the expectation at the agency level. Agents, you better be given complete submissions with all the supplementals filled out, all the loss data, target premiums, all of the things that the wholesaler needs. And that's just the beginning of it, right? But I can tell you, my number one wholesaler is my number one wholesaler because the lady who wrote the very first policy that I ever wrote when I got my insurance license 20 years ago is the one who helped me get that done. And I didn't care whose name was on the outside of the building. I cared whose name was at the bottom of the email. And I followed her from where she was to the next place to the next place. And that's why my book is as big as it is with that particular wholesaler. She unfortunately passed away, and now we're in the process of evaluating that relationship and trying to continue to build on it. But it's not the same. And I'm not going to say that the person who took her place isn't good at her job or adequate in that role, but the relationship is not the same. It's not, you can't go from a 20-year relationship to no relationship and immediately feel comfortable working with anybody. I think we can all say the same thing. That trust has to be earned on both sides. We're in the hardest market that most of us have seen in our careers right now. And part of the problem that we have is, I think that agents have unfair expectations of what they should get from the wholesale, the broker relationship. Number one, if they're not sending things in that are complete, you shouldn't give them anything back. Like, it's no different than my opinion that if you want to get paid on an account, it has to be in the agency management system. I'm not going to go chasing you down to put information in when we run commission reports. If you care about your paycheck, get it in the agency management system. Number two, I think that we don't understand the why behind a lot of things. And it's easier to cast blame. So target premium is always one that when I speak publicly, I address, because I think it's something that agents are just thinking that the underwriter wants to know that so they can undercut the next person, when the reality is, people, if you were doing premium versus loss summaries, they'd have the target premiums anyhow. Like, they would know what they are. They're not asking you that to beat the quote. They're asking it to see if they can even be competitive. I also think agencies need to do a better job of being open in their communication. If you've gone to two other wholesale partners before you go to a third, probably need to give that third person a marketing list of where everybody else has been. Don't waste their time. You don't want to go and key in a bunch of stuff to online rating platforms only to find out that you're blocked when you get to the FEIN validation or whatever else. Guess what? It's not even that easy for these people. They're putting submissions together, sending it to market, and they've lost valuable time only to find out that, oh, two other people have already been here. And oh, by the way, we've seen this the last 12 years in a row, and we've never had a fair opportunity to compete on it. This is why it's so important for you to talk to your prospects and your clients about their reputation in the underwriting community, because you want all of this concierge white glove service in reciprocity, but that's not what you're depositing into that relational bank account. You're giving them a half effort, half information, and in many times dodging their questions when, about target premium and everything else, because there's just no understanding. Now, I'm not going to sit here and say that about agencies and not talk about wholesalers at the same time. I feel like wholesalers are under a tremendous amount of pressure right now. And I think that agents should look at it as, if I've got 12 submissions over the course of 2 weeks, I can take that and probably multiply that by 20. And that's how many a broker has gotten. So if I'm stressed managing 12, imagine what managing 240 feels like. And you hear, well, they're slow in getting back to me. Well, did you give them everything that they needed, the first time? Because guess what? If you didn't, you might get to the top of the stack, but if it's not all there, boom, you're going right back down to the bottom, and you'll get an email maybe that says, hey, I'm still waiting on such and such. But if I'm a wholesale broker, I'm not even going to waste my time if I don't have all the information. But the other thing is, I think that I think it's really important, and it's difficult with all the pressure that's on people right now. Taking the time to educate and have conversations is probably not top of the list. But if a broker were just to say, listen, the reason I need this is because, now you have a reason that makes sense to the agent, and they can take the time to go back and explain that to their prospect or their client. And I think that the communication lines are more adversarial most of the time than they are collaborative. And that really needs to change. Pick up the phone, have a conversation. Hey, I'm getting ready to send this over. Here's what it looks like. What do you think about the class? Here's the size. Here's the loss ratio. I'm going to give you a narrative, but I just wanted to kind of walk you through it because I don't want to waste your time if you don't think you have a market for it. You think that broker would rather take a 5-minute phone call or spend an hour and a half putting something together, or even just reviewing it only to realize it's not going to go anywhere? So I do think both sides of the equation need to have better communication and more open communication with each other. And I also think that expectations need to be established on the front end. If you're an agent that's waiting till the last minute to submit something and you need a quote in 2 days, but you don't say, hey, this expires next week. I get it. It's a short leash. I really need to be able to turn this around in 48 hours. Do you think you're capable of doing that? If they say yes, then hold them to it. But don't just send a submission in and hope that it gets back to you in 2 days and you've never set expectations. In the same time, I think that our partners on the wholesale side need to look at it and say, hey, look, I'm just giving you a heads up. I'm about a week out in being able to offer any quotes. I understand that's probably not what you want to hear, but that's the reality. If you can get me everything that I need immediately, I'll do my best to turn it around. But I just want to let you know up front, I'm running right now at about a week out. Okay, well, if you tell me that, now I have a decision as the agent. It's not cool to call in 3 days and say, hey, where's my quote, when they already told you what the expectation was. And so I think that's really important, man. I mean, that's just random food for thought. So.
No, I think you're spot on. And the partnership between agent and wholesaler is increasingly just critical for finding success in the market today. And I admire agents that have stories like yours of a wholesaler that they've worked with closely for 5, 10, 15, 20 years, and they've got their person. And those are those relationships that we want, nothing to do with. It's you found your person, you're good. Like that. Let's move on to the next one, because there are equally so many that are still submitting their first wholesale app ever right now, and have never gone through this process, and are calling us not just to understand expectations, but to understand how they even talk about this to their insured. They have no idea how to frame this up to their insured. We have agents that call in and have no idea what E&S surplus lines taxes are and stamping fees are, and if you can't, as a wholesaler, wrap your arms around those customers and really support them and give them what they need to ultimately turn around and work with their client and sell that piece of business, then you're probably working with the wrong agents. And so in our world, that's what we preach every day. Now, you're right that we deal with thousands of transactions a month. And unfortunately, that means that there's going to be a few where communication is far from great and turnaround time sucks and all those things. But by and large, the fact that our brokers tend to spend the vast majority of their day with agency principals and producers from sub $5 million, sub $3 million revenue agencies who are not savvy in interacting with wholesalers, that don't have large wholesale books. That's one of the things that we struggle with, is I can't just go to these agencies and say, we need more of your business, because we've got all of it and it's 3 policies. And that's great, and we love you for that. But it's such an odd part of the landscape of this industry. It's such a convoluted and messed up part of the industry, right? There's don't get me started on the insurtech side of the people who just say, well, we can eliminate that transaction. Well, yeah, in theory you could, but in practice it does play an important role, and it'd be great if it was more efficient, but I also think it'd be great if it was just more human. And if people just took a deep breath and communicated more effectively and cared about both sides of the transaction, and did their best to acknowledge the fact that when we do this well, everyone wins. If we suck as a wholesaler, we're not writing that business. So inherently, we just lost money. And our client, our local agent that we work with, they also lost money. And so we did bad on 2 fronts. So if we can position ourselves in a way of saying, this submission matters to this agency, so it's going to matter to us, and we're going to treat it like it's our most important submission. I couldn't care less what the premium is. I care about the story, because a lot of these submissions, it's your brother-in-law's lake house. It's the gal that you serve on XYZ Foundation's board with. It matters to you not because it's going to generate a ton of revenue for your agency. Maybe it will, but because it matters on a human level. And that's what's beautiful about what we get to do every single day.
I completely agree. Talk to me a little bit about how they get a hold of you, man. I mean, we've been going for a solid 50 minutes at this point almost. Number 1, what have we missed that you wanted to make sure we cover? And number 2, how do they get a hold of you to learn more?
Yeah, I love these conversations. The easiest way, check us out on LinkedIn, Local Edge Brokerage on LinkedIn. You can find me on LinkedIn, Ted Stuckey. Drop me a note. I'd love to connect. We spend a lot of time just helping agents understand what capabilities are out there to help them thrive. To your point, the vast majority of agencies just have no idea that there are these types of capabilities, whether it's with us or someone else. We want to have that conversation, and we'd love to sort of build that partnership. I'd be remiss if I didn't call out just a couple things that we're seeing with agents that we work with that are really starting to set them apart in the market. Depending on your state, this is sort of hit and miss, but boy, if it's not the sexiest product in the market right now, I don't know what is, and that's wind-hail deductible buybacks. It's remarkable how hard it is still to get that business placed. We're seeing it now both on the commercial line side and on the personal line side. Across the country, agents are really finding a lot of success in buying these relatively obscure instruments to help take down buy back some of that deductible, make that underlying policy a little bit more affordable, which ultimately lessens the potential financial loss for their insured and makes that agent look like a superhero. We're loving that. I know there's a lot of wholesalers out there that are providing access to it, but every single agent that I talk to that's writing wind-hail deductible buybacks, they are a hero in their eyes, the eyes of their client. And the other thing I'd be remiss if I didn't point out on is the variety of those wholesale specific admitted markets that traditionally were maybe a little bit more pseudo specialty lines, the American Moderns of the world, the USLIs of the world. Um, I tell every agent who asks me this question that if you're not writing with some of those markets, I think you're doing yourself and your agency a disservice. Particularly today, where what used to be the national market that had broad appetite and would write just anything in your community, that's gone away. Having those tools in your tool belt where they're not expecting you to write 60, 70% of your business with them, but they're expecting to be there and to be able to help you be competitive. I know a lot of agents that are losing their shirt because they won't work with them, because they want to, keep those national markets fed, and they're doing it to a detriment. And so I would encourage you, locally find a wholesaler that is sophisticated in your area and understand what those markets are. Again, they change by state. David, you're in Florida, which anymore is not the worst state, thank God,
Yeah.
but it's there.
It's funny, man. We're actually starting to see it soften up a little bit here, which has been great.
It's amazing what a few years will do. Some legislative actions and slightly favorable weather experience. But
yeah, don't get me wrong, man. We're still a couple years away, but I mean, property renewals have been more favorable. We've seen some that have had decreases, flat at a bare minimum, and terms have been a little bit better. I mean, it's not. I'm not going to say that the whole riddle has been solved, but I do feel like we have kind of plateaued a little bit and have started to see it soften a little bit, which is good because we were the first ones in the hard market. I mean, I've perpetually been in a hard market for 20 years at this point, relative to what somebody in Ohio experiences. But, it's good to see that things are starting to shape up a little bit. Hopefully all of the legislation that has been passed and some of the other measures they've taken will help us, but who knows, man? It's Florida. Everything's cyclical here. It's all based on how hard the wind blows all summer this summer.
Exactly. There's a wait and see approach here, but definitely good capacity going into the state. We're seeing the same thing. If your property renewal is not flat, I think you need to look at yourself in the mirror and see what the hell's going on, because you should be in a good position.
I have an account for 1/1 that I was able to place that's like 85 million in TIV, and it had a $87,000 reduction in the premium on it, and actually increased coverage on both business income, was able to pull the waiting period on extra expense. Like, there was a myriad of things that happened. It wasn't just the premium savings, it was a whole bunch more. But the fact that we were even able to get it insured to value was the first part, but we got insured at the value and saved money. Last year, the carrier that was on it for that last year and the year before only had like a 25 or a $50 million loss limit on it. And this is an account that if they had a total loss, it would be a whole bunch of money. So it's been good to see that stuff kind of open up a little bit. I'm pumped about it.
Well, that's got to be an example of some of the stuff that you preach around, not just viewing this as a transaction, right? Clearly there's work done before the market began to soften, where when it did soften, it had an exponential impact on the results there, right? You can't ever stop a market from hardening, but you can absolutely ride a softer market if you're investing when times are tough. And so that's either a windfall in premium savings to the insured, or the ability to actually round out their protection and give them more for hopefully even less, which I think speaks volumes to why that is the right way to approach this business, and not enough do it. And this is an opportunity now for folks to come in and start to poach some of that business if they want to.
Yeah, and the real reason that it happened is the incumbent was asleep at the wheel. I'd given him plenty of opportunities over the last couple of years to not try and take advantage of the client, which is what I felt was happening. And I asked the question of a carrier that a lot of other people probably would have automatically thought was going to be a decline without asking it. Picked up the phone, had the conversation with the underwriter, said, this is likely the most pristine account in my entire book of business. and I'm not happy with the way they're being treated right now. I don't know what your property capacity looks like, but I know this is a preferred class for you. Tell me if we have the ability to dance. And they were like, you got to be kidding me. This thing's been on our radar for a number of years. We didn't know who controlled it. Da 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 da. And sure enough, that's what happened. And I mean, here's the thing, people, if you're listening to this, you can't be expected to know who to call or to pick up the phone on every single account and get to the right person without spending half your day just trying to track them down. That's the other benefit of working with somebody who is working with all of these carriers on a daily basis. They know these things. They know the people to call. That's what they're doing to get business placed. So, you don't need to spend a ton of time worrying about marketing intelligence. I say outsource that to somebody who's actually in market intelligence all day, every day. Certainly not for your core carriers, because that's who you're writing the majority of your business with. But there's going to come a time when that core carrier is going to let you down, and if you don't have the contacts and the ability to go and find somebody else to take that risk on, you're in trouble.
And there's never any harm, at least with Local Edge, in picking up the phone and just saying, hey, I've got a wild idea. What do you think about this? It's not going to take more than 3 to 5 minutes to talk through the account real fast and be like, is it worth submitting through? I'm not saying, you don't remarket everything through a wholesaler just to not write a bunch of it. That's a terrible waste of everyone's time. But to your point about calling another market, saying real quick, here's an account I've got. What do you think about it? Wholesale brokers will have the exact same conversation, and they may actually surprise you. I've got a number of experiences where an agent's called me and said, hey, I just got off the phone with so-and-so broker on your team that reminded me that I have a direct appointment with a market that could write that. And they validated that they could write it, and I just went and took it direct. So I'm sorry I didn't give you any commission, but thank you for that. That's our job. Like, our job is literally
that'll come
trying
back
to place
to you
this stuff
tenfold, man. I mean,
exactly.
every time. Because
Exactly.
it's going to keep people from being apprehensive that you're going to just try and gobble everything up and force it through on your end.
Exactly.
Good deal. Where do they find you, man? Where do they go get more? Localedge.com, or is there a different website?
Hit us up on LinkedIn. We're still in the name change phase. So
Okay,
Local Edge Brokerage on LinkedIn. You can find out everything about what's new markets. And like I said, find me on LinkedIn, Ted Stuckey. Drop me a note. Love to connect and tell folks more about what we're up to.
Good deal. Well, listen, man, I appreciate you taking an hour out of your day, especially on short notice of doing the reschedule. I actually was able to score tickets to go to the UFC in Kansas City this Saturday night. So that's why I'm flying up on Friday.
Amazing. I was wondering what you were doing out there.
Yeah. So Kansas City's turned into my home away from home to some
Well, you've got a big IPFS relationship, right?
I do. Yeah. No, I sit on their advisory board, and we were just there for their sales summit last
Oh,
week.
that's right. Yeah.
So I was on a panel for that, and I didn't realize that I was going to be turning around and going back this week, like almost just a little more than a week later. So, but there's much worse places to go. Great food, great people in the Midwest. Certainly happy to be going out.
So that's down at the Sprint Center. Is that still called the Sprint Center? Yeah.
Yeah. Sprint Center. T-Mobile's the one.
T-Mobile Center. Yeah. Oh, that'll be a blast. You'll are you taking your family?
Me and my wife.
Oh, very cool.
Yeah, because the last 2 UFC events I've gone to, it was me and my oldest son, and I was reminded that apparently I forgot that she's a fan too. So,
God, she needs a special trophy for wanting to go to that. So,
oh yeah, no, she's all about
phenomenal.
It, man. She's probably watching to figure out moves she can put on me when I misbehave. So
yeah, I get that definitely.
Good deal, man. Well, listen, appreciate you coming on. Everybody else, we will catch you next time. See ya.
Thanks, Dave.